Well, thank you everyone for joining us for this week's episode of Mortgage Matters with Chris here. We are very excited about the topic today as it's really timely and it's really buzzing right now in our Sunshine State. So Chris, thank you so much for being here. Chris, you and your wife have been in the mortgage industry for many, many years. You have helped many, many people work through down payment assistance programs, which of course is the topic today. And you have a little 52 something. I always lose count combined years in the mortgage industry together. So
like 50 something, almost 50, I guess.
At some point you stop counting, right?
Yeah, I'm not counting anymore.
Yes. Well, so thanks for being here today. So we're excited to talk about this program. This is a big one for Florida residents. So if you are tuning in from outside of Florida, this is a great encouragement to move to Florida because we can help you in Florida.
Great incentive. Correct.
That's right. So a little bit of background. Last year, or actually just before last year, there was a new program called the Florida Hometown Heroes Program. It was a bit of a modification of a program that had existed for a long time. And it expanded down payment assistance to people who were considered hometown heroes. So like police fighters, teachers, there was a long list of about 50 people
50 different,
who qualified for that. This year, this program has expanded even more in a couple different ways. The General Assembly passed the law in the springtime, which is what became this new program. And they drastically expanded who qualifies for it. They expanded how much money you can get, eligibility, everything. So that's what we're going to dive into today, getting into the weeds and the details about this program as it just went officially live on Monday of this week, July 1st.
That's right, July 1st. So there's a lot of different, so to kind of give you back on the older program, which was still fantastic.
Yeah.
They were giving $25,000. And as Mindy, as you alluded to, there's 50 different occupations. I mean, you go from speech therapist to teacher to an assistant to a librarian. I mean, the list it's a huge list of different occupations that qualify for this, which you can go to the blog and there's a link to show you all the different occupations. But the exciting thing as of July 1st, what they did and what they announced is not only did they up the grant to $25,000, but they upped it to $35,000. And that's going to be a huge benefit to not only those people, our heroes that are doctors, teachers, police officers, firefighters, all those people that are in those occupations, but it's also opened up the eligibility to full-time people in the workplace that are employed here by a Florida-based employer.
Yes.
Now that's huge. So you're moving into this state, you're a first-time home buyer, or you live here in this state already and been living here and you haven't bought a home, but you're a first-time home buyer. Well, you could be eligible for this $35,000, and these interest rates, which you can receive some little bit of a discount on these interest rates. And we're talking about FHA, VA, Fannie Mae, Freddie Mac loans. So any conventional loans or government loans, you get these reduced upfront fees along with, reduced origination costs. Right now with the rates where they are, a lot of people are paying origination costs on regular conventional loans. So it's kind of a strange place where we are in this, in our market right now. What we're seeing with interest rates, as many of you know, are not at where they were a few years ago. They're a lot higher. This is another option that's available. We're pushing it. Now, the one thing I can tell you is there's limited amounts of money there. So if you've been sitting on the fence or you want to sit on the fence for another 6-7 months, this money could be exhausted and gone. So this would be something that you would want to go after.
The figures is the General Assembly appropriated $100 million to the program. Now they did $100 million last year, and mind you, it was very narrow of how many people. I know 50 occupations sounds like a lot, but considering how many just different types of employment there are, it was relatively narrow. And a lot of that money got used up, which is a good thing. It was a very good thing. So another $100 million have been appropriated for it. Yet with the qualifications being so much more wide and so much more diverse, we definitely expect to see this down payment assistance money move pretty rapidly, which again is good for the Florida housing market here. But just a little bit of a not warning, but a little insight for anyone who is thinking about stepping into it. So, Chris, what I think is so cool about this program is the diversity of the types of jobs people employed that it includes. So the people who were previously included, anyone who works for a local or the state government, public employees, they still qualify for this.
Right.
But now it includes people who are small business owners, people who work for a small business, maybe a mom and pop shop, anyone who works for a Florida-based manufacturing business or things like that. All of these people are now included kind of in this umbrella that weren't previously included.
That's right. And, what the borrower can look at or what the client can look at is receiving up to 5% for their first mortgage down payment amount, along with any closing costs that are equal or up to $35,000. So let's just kind of walk through a scenario, because I think, seeing sometimes for me, it's easier to actually hear the numbers and see them. So if you're talking about buying a house for, let's use a round number of $500,000, and you're putting 5% down, that's $25,000 down. And then let's just say your closing costs are $10,000. Well, you would exhaust all $35,000 on that money, but it'd be very little or zero out of pocket at the end of the day. Now that's an awesome opportunity. And we just talked about where rates were right now. Now that money isn't necessarily free money. It's you don't have to pay it back until you refinance or you sell your home later down the road, but that's at 0%. So that's huge. You're getting up to $35,000 at 0%. Where are you going to get money at that? I mean, we thought it was lowest in the twos, but
right.
I think zero beats the twos.
Can you explain, what does a non-amortizing loan mean? Does that mean that their monthly payment's going to be bigger? Does it extend the life of the loan? Explain to us what that means.
So really what it is they're putting that money, that whatever it is, whether it's $20,000, $25,000, $35,000, whatever it is, it's going on the back end of your loan. So it's not amortized. There's no payment involved, 0%. But what happens is if you go to sell the home, you're going to have to pay that money back. So say you bought the house and, your loan amount was only for $475, not $500. Well, when say you decide to sell it, 2, 3, 4 years later, and you might have paid off $5,000 or $10,000 of equity, you're going to put that money that you took on the front end off on the payoff. But by then you're going to have extra equity too. So you're still probably going to be walking out with equity, but you were able to go to 100% financing. You're able to walk in with very little out of pocket. In some cases, could be zero out of pocket because, you bought for lower than the 500 mark. So you didn't need all $35,000. So it was able to cover all your closing and your down payment. And then when you go into refinance or you're trying to do something else with that money, then that note would be called upon. So it's really a deferred second mortgage. It's put on the back end, which you don't have to make any payments for. But again, it's free money at 0% in a sense. I mean, you get money for 0% interest, and you don't have to pay it back until you sell or you do something. Whether you're looking to refinance and take money out of your property. So it's an awesome, awesome opportunity.
So for most home buyers, not all, but most home buyers, what they're thinking about when they buy a home is, what's that monthly payment going to be for me? Because, that's how we pay our bills monthly, right?
Right.
So what you're saying here is that by this down payment assistance being tacked in at the end of the loan, no one's going to have to worry about that monthly payment of theirs going up by that much amount of money.
Exactly. And there's a couple other stipulations which we should kind of bring up. There's income restrictions as well based on the county that you're in. So, let's just kind of talk about a couple of them. So if you're here and, we do everywhere in Florida, but we can attach this chart to our blog or in our vlog on our site so you can look later. But if we're talking about Manatee County, the Manatee County is $137,100 a year. So that would be, again, for your FHA or your VA type of a loan, along with your regular conventional type style loan. So, it gives you a lot of income, to be able to qualify for this loan. So if you're making $300,000-$400,000, you wouldn't qualify for this loan. But if you're under the income thresholds and you work for a Florida-based company, this is the option for you to go to. This is an opportunity that we have never seen, not only here in the state of Florida, but I don't even think we've seen this much money in any other state. So it's probably one of the best down payment assistance programs in the country right now as we sit here on top.
Well, and what a good relief for Florida homebuyers, because so many people, especially people within that income limit that you mentioned, feels like the housing market and price of homes has taken off and left them behind, that their income just isn't keeping up with, with inflation, one, and then the increase of home values and home prices. So this really comes in and bridges that gap between what people not can afford, but when people can come up with the money up front to pay and the price of homes. They don't have to worry about bridging that. This is that bridge for them. Exactly.
So that's a good thing. I think if we want to just recap again, we try to keep this like 20 minutes, 15 minutes. The main things you want to think about: if you are part of the original hometown heroes and you're in one of those occupations, you still qualify. Veterans qualify. So if you're one of those 50, now if you're working for a Florida-based employer, now you could qualify, right? And not only was it from 25,000, now it's up to 35,000. And as we know, like some of the loan limits have raised, so it just ups the opportunity for you for the type of home that you can buy. And lastly, the only thing that we're going to look at is the income restrictions that you have to adhere to. So we just talked about that. I think it was like 137,200 or something like that of household income. So as long as you fall within under that, and the last part that is just as much important, it's a non-amortizing 30-year deferred second mortgage, which means you do not have to pay anything today on it or next month or the month after. However, it becomes due and payable upon the sale of your property or refinancing. Also, if you are to transfer a deed over to someone else, then it would be, and you're not planning on occupying the property, then it would be called, that note would be called upon at that time. Important piece of it is it's 0%. So 0% interest, right, for that amount of money. So no matter what, if you had to borrow that money at today's rates, it would be a lot more expensive than what you're going to get this money at today. So essentially it's, you're borrowing money for free at zero. Yeah.
Chris, thank you so much. Well, thank you especially for taking the time on this, because we know that there have been a lot of questions and a lot of people searching for this exact information on this program. So we hope that this aggregates everything for our viewers and listeners. If you have further questions, or if you're wondering if you qualify, like is your company or is your job Florida-based and you're just not quite sure, Chris, your team can compare it to the state, what the state considers as something that qualifies. So
absolutely.
I encourage people to reach out and have a conversation with you to see, is this something that they can do, and get on a clear path forward.
And there's limited banks that are, qualified to do these, and we're one of them. So there's very few out there that are. So we are preferred bank for this program. That's one thing that's important. And I can't stress enough, time is of the essence of this. Yeah. Like Mindy said, $100 million. And with this being there, with the influx of people that are coming, with the opportunity ahead, I don't know if this money will be around in 4 months. So if this is something that you want to seriously entertain, call us. Let's see if you qualify for it, and then let's get you on the right path with the right agent. We're partnered with many good full-time agents out here. I can help you connect you with the right people, but or just call whoever you currently work with, and you want to get on this regardless. I mean, I want to keep this educational, but I also want to stress, if you don't have somebody, we're here to help you and get the ball rolling right away. So,
well, Chris, that's our time.
Thank you.
And
awesome.
So for everyone, if you would like to read the blog or look at it yourself, I'm going to link it to the video in the podcast notes, as well as that previous chart so that you can see what it was before and such. So as always, please like and subscribe to this video and to our channels. We're on YouTube. We're on your favorite podcast platform. And then, of course, we always share these to our Instagram and Facebook pages as well, which will be linked here. So, awesome. Chris, we will be back next week on another topic. And until then, until then.
Thank you, guys.
Thank you.
Call me if you have any questions. I'm here 24/7 for you. Thank you.
Yes. Everyone have a wonderful weekend. We'll see you next week.
Bye, Mindy.
Bye-bye.